Hey, good morning, everyone. Welcome to Midwest Market Solutions Insider TV. It is Friday morning, November the 3rd. Thanks for joining us here. As we are looking at, I think, going to be some very exciting cattle markets today. Yesterday, we had a big bearish reversal in the futures. We were sharply higher early morning, and then by midday, we started to reverse and ended with an outside day lower. So, a little bearish technical action. Now, normally, I would say this looks like chart weakness should follow through, maybe another $3 lower. There's a big gap on the charts at 121.70 for the December contract. That would be a target that we should gravitate towards. But I say that at normal circumstances, that's what we should do. I don't think we're going to do that. The cash trade came in late last night at a very bullish 124 to 125 in Kansas and Texas. The volumes were decent. And we're going to see some pretty aggressive short covering and hedge lifting. Remember, last week's trade was 117.50, so you're looking at a sharp jump from that level, and should be fairly friendly for this cattle futures despite the technical weakness yesterday. Now, if we open up trade and can't muster much of a rally and futures start to fall again, that's got to tell you something bearish that's going on when you have that strong cash markets and if the futures do not react. So it really gets down to how the futures reacts, but this should be a positive for the cattle market despite the technical weakness that occurred yesterday. All right, we're looking at the grain trade. It's kind of quiet overnight. Beans are down about 3 cents. The informant numbers were a little negative for corn. FC Stone is right in line with what they're going to say. And so we look at the calendar next week. Next Thursday, supply and demand report is coming out, and we do expect to see increase in corn yields, a decrease in soybean yields. So trade's going to start positioning ahead of that report early part of next week. We're down overnight in the beans, a little bit higher in the wheat, but I think we're going to reverse course in the wheat and start to trade lower as the dollar is working its way higher. Now, of course, the dollar course could change. That will affect how the wheat trades during the session. That's what's really our driving force. Our demand is pretty routine. And of course, we'll be watching for export sales when the USDA office opens up at 8 Central Time. All right, have a great day of trade. Get back to any of our offices if you have any questions. They'd be glad to assist you. This has been Brian Hoops from Midwest Market Solutions. Have a great day, everyone, and we'll talk to you soon.